Welcome to the latest installment of our BBB webinar series. I'm your host, Roseanne Freitas, and today's webinar is COVID-19 Relief, Understand the Restaurant Revitalization Fund. Before I introduce our speakers, I will go over some housekeeping items for those of us might be joining us for that first time. So resources like today's webinars are made possible by BBB accredited businesses. Those are businesses that have taken a pledge to act with integrity and uphold BBB's 8 standards of trust. We want to thank them today for their dedication to furthering BBB's vision of creating a marketplace where buyers and sellers trust each other. These webinars are also made available for you on our YouTube channel. So later that link will be posted in the chat box, which you can access at the bottom of your screen. So while you're looking at the bottom of your screen, look for the Q&A button. If you have questions today, please put those questions in the Q&A section. You can use the chat, but not for questions, okay? Questions should go in the Q&A section, and we're going to reserve some time today to answer those questions. Also, you can upvote a question that you see. We will be determining those which questions to answer by the number of votes. So if you see something you want answered, make sure you click on it. Before we start, I'd like to introduce our speakers today from the Small Business Administration Seattle office. Our first speaker is going to be Kathy Griffith. She's a lender relations specialist. Kathy has been with SBA since 2018. She works with over 100 lenders to facilitate the delivery and availability of SBA loans in the Seattle district. Prior to joining SBA, Kathy was a government guaranteed lender for 25 plus years, most recently as SBA department manager at a small community bank. She enjoys making capital more accessible to small businesses in Washington and Northern Idaho. Our next presenter will be Denise Albrecht. She's an economic development specialist. Desiree, excuse me. Desiree has been with SBA for 8 years in various roles. Prior to joining SBA, Desiree worked in licensing for the Texas Board of Nursing. She's also a veteran, having served in the Minnesota National Guard with a deployment to Iraq in 2004. Thank you for your service, Desiree. She has a bachelor's of business administration and human resource management from Texas A&M University. Desiree is passionate about helping small business owners and entrepreneurs connect to the resources they need to be successful in business, specifically women, minority, and veteran-owned businesses. And our last speaker today will be Janie Sacco, Outreach and Marketing Specialist. Janie has been with SBA since 2020. She's been in the banking industry, though, since 1975, providing funding to the small business community in the greater Puget Sound market. Janie serves both SBA lenders and borrowers. She is devoted to providing quality financial education to small business owners and entrepreneurs, specifically focusing on women, minority, and veteran-owned businesses. And while these 3 ladies are based in the Seattle office, remember, you can always reach out to the SBA office located in your district. Now I'm going to turn it all over to Kathy Griffith.
Thank you very much. It's great to be here. We really appreciate your time and your attention to this very important topic, very timely. And we're going to go over a slideshow that's about 30 slides. You are more than welcome to ask questions during the presentation, or we'll have time at the end. So whatever is best for you. Today, we're going to go over some slides on our Restaurant Revitalization Fund. I do want to mention that there were a couple of dates that have passed, but we did open up the portal for applications on May 3rd. So this is an active program right now. You're able to apply. Hopefully, some of you already have applied and you're just looking for some clarification, but the portal is currently open. Next slide, please. So we're going to talk about the Restaurant Revitalization Fund. We call it the RRF, or maybe the grant. First of all, what is it? Well, the Congress passed the American Rescue Plan Act, and the president signed it back on March 11, so just a couple of months ago. And inside the American Rescue Plan was the authorization of the Restaurant Revitalization Fund. And the SBA was appointed at that time to administer the fund. There's no closing date. We're going to go ahead and keep it open until the funds are expended. We currently have $28.6 billion in the fund. And we're asking the successful recipients to have all that grant money spent by March 11, 2023. So there is a 2-year period with which to spend the money on eligible uses. Next slide, please. So who is eligible? Well, obviously, the first word is Restaurant Revitalization Fund. So we know that restaurants are eligible, but there's a lot of different industries within that term, the general term restaurant, that we want to make sure they know they're eligible as well, or they're included in with the act. And that includes restaurants, food stands, food trucks, food carts, caterers, bars, saloons, lounges, taverns, snack and non-alcoholic beverage bars like coffee shops and ice cream shops. The following entities could be eligible for an RRF grant. If you are a bakery, a brew pub, a tasting room, a tap room, a brewery or a microbrewery, a winery or distillery, or an inn. And that you are eligible if you can go back to your 2019 gross revenue and you can show that at least 33% of that gross revenue was derived from on-site sales of food and or beverage to the public or patrons. So bakeries, brew pubs, tasting rooms, tap rooms, breweries, microbreweries, wineries, distilleries, inns, you must meet that 33% hurdle looking at your 2019 revenue. Basically, any similar place of business in which the public or patrons assemble for the primary purpose of being served food and or drink could be eligible for the Restaurant Revitalization Fund. Next slide, please. How much does the fund cover? Well, the minimum grant amount is $1,000 and the maximum grant to one entity is $5 million per location. Or if there's more than one location or you have affiliates, then the maximum is 10 million to everything that's included. Next slide, please. If you have been looking at our Shuttered Venue Operators Grant program as well, there are a little differences between the two. First of all, the Shuttered Venue Operators Grant requires that the applicant be registered in SAM and have a DUNS number. This is not a requirement for the RRF. If you have an unexpired individual tax identification number, you could be eligible to apply. Next slide, please. Who is ineligible for the program? The following entities are not eligible for the Restaurant Revitalization Fund. If you're state or local government operated, if you have more than 20 locations, if you have a pending application for the Shuttered Venue Operators Grant or have already received a Shuttered Venue Operators Grant, if you're a publicly traded company, if you're permanently closed, if you're a nonprofit organization, or if your calculated grant amount is less than 1,000, then you would not be eligible for the Restaurant Revitalization Fund. Next slide, please. So once you've determined your eligibility, you pretty much can have any type of entity legal status that's possible. So that includes C Corps, S corporations, partnerships, limited liability companies, sole proprietors, self-employed individuals, independent contractors, tribal businesses. And if you're a limited liability company, you can either file your tax return as a S corporation, which is using the form 1120S, or as a sole proprietor, which is using the Schedule C in the form 1040. Next slide, please. You also could be eligible if you are a franchise, but you must be listed in the SBA franchise directory. If you find that you are not listed, then the franchisor is going to need to submit some documentation to the SBA for review and potential approval. And that'll usually start with the franchise disclosure document, but it could include other documents as needed. Next slide, please. You also could be eligible if you are currently in a bankruptcy. So if you're in a Chapter 11, 12, or 13, and you're operating under an approved plan of reorganization, then you are eligible to apply and receive a restaurant revitalization grant. However, if you are permanently closed or you're involved in a Chapter 7 bankruptcy, or you're at that 11, 12, and 13, but you are not yet under an approved plan of reorganization, then you are not eligible to apply or to receive a restaurant revitalization grant. We talk about permanently closed, but that does not necessarily mean currently closed. If you are currently closed due to a COVID-19 related restriction, and you intend to reopen at a future date, then you are eligible. You're not considered to be permanently closed. However, if you have permanently closed your business, then please do not apply for the Restaurant Revitalization Fund. Next slide, please. If you have received a Paycheck Protection Program loan, what we call a PPP loan, this loan amount will need to be deducted from your restaurant revitalization grant calculation. So you cannot have both a PPP and an RRF. You can receive and be approved for both, but the PPP will be deducted from your potential grant amount. If you have already received a PPP loan, you will need to use the same borrowing structure for the Restaurant Revitalization Fund. So for example, if your holding company applied for and received a PPP loan, then your holding company will need to apply for the RRF. It's going to need to mirror the same borrowing structure as the PPP. If you want to apply for an RRF and you have a PPP application pending, then we're recommending at this time that you withdraw that PPP application. So the system can't, I don't know if that's possible, but we can't mistakenly approve both at the same time and then have to come back to you later for an overpayment. Again, if you have a pending application for the Shuttered Venue Operators Grant, please do not apply for the RRF. Next slide, please. And of course, when you submit your application, just as it was with a PPP loan, if you submit your application for the Restaurant Revitalization Fund, you will be certifying that current economic uncertainty makes the funding request necessary to support ongoing or anticipated operations. So I'll hand it off to my colleague, Des. Des, are you ready?
Yes, I am. Thanks, Kathy. Okay, so we'll go on to the next slide. Once you receive a fund, what can you use? What are eligible uses of the grant funds? And there's three main categories. So they are business expenses, construction expenses, and business debt. So business expenses are exactly what they sound like. Things like your business payroll, your utility payments, any maintenance expenses that you have, supplies, including any PPE or cleaning equipment, your business food and beverage expenses, including your raw materials, covered supplier costs, and your operating expenses. So like insurance, marketing fees, license, point of sale equipment, rent, all of that. Your construction expenses are a little bit more limited. If you're going to be using grant funds for that, you can only use it to construct outdoor seating. You can't use it to construct indoor seating or to build a new location or anything like that. The only construction expense you can use the fund on is outdoor seating. And then when it comes to your business debt, you're looking at payments on any of your business mortgage obligations or business debt service. So your principal and interest payments, but not prepayments. So If you want to go to the next slide, we'll talk a little bit more about it when it comes to the debt payments. So when we're looking at your business debt, so whether that's your business mortgage or other business acquired debt that you have, if you are delinquent on, say, your rent or your mortgage or something like that, you can get yourself caught up as long as that expense was incurred during the covered period, which is February 15th, 2020 to March 11th, 2023. So if you're behind on rent and it was incurred during that time frame, but after February 11th, 2020, you can get caught up and you can continue to make monthly payments on your mortgage or rent or other business service debt that you've got. You can make your monthly payments through the life of your grant through the covered period. So again, funds must be spent on expenses that were incurred between February 15, 2020 and March 11, 2023. So your covered period, however, you have, like Kathy said, until March 2023 to spend the money. That's the end of your covered period, unless you permanently close your business after receiving grant funds. Then your covered period will end as soon as you close your business. And or if you sell your business, same thing, your covered period ends there. So if you have not spent all of your funds by the time you either close a business, sell a business, or by the time March 11th, 2023 rolls around, which is the end of everybody's covered period, if you still have money left over, you will have to return that to the government. And we will tell you how to do that later on after you've received funding. So next slide. The other thing to note that's really important when you're looking at the RRF and using your grant funds, it's really important that you have some sort of way to track your expenses and track how you're spending this grant funds, because you will be required to self-report and self-certify and provide a detailed expenditure report and certification for the life of this grant as you're spending the money. So it'll start, your first assessment will be due December 2021, and then every year thereafter until you're done spending grant funds. And so we don't know exactly what that's going to look like or how you're going to do that or anything like that yet. But once the grants are awarded, you'll see more information about how to submit that information to SBA. So in the meantime, just make sure you have some sort of a system set up in order to track how you're spending grant funds, so that when report time comes, it's pretty easy for you to fill that out in whatever form it comes in. Next slide. So now the question that always gets a lot: how do I calculate my potential fund amount? How do I figure out how much of a grant I can get? We're going to cover these briefly, from the easiest way to calculate to the hardest, and from the fastest processing time to the slowest. And so the basics of it, before we get into the nitty gritty of it, is basically we're looking at, remember, to be eligible for RRF, you had to have pandemic related loss in revenue. And so the funding formulas that we're going to go over are geared towards that, exactly that, finding out your pandemic related losses. So calculation number one, and we worked really hard on these calculation names, but calculation number one is for businesses that typically have been in operation prior to January 1st, 2019. And, you're an existing establishment. For that type of business, your calculation is fairly straightforward. You're going to take your 2019 gross receipts, which we'll cover what that means in a minute. You're going to subtract off your 2020 gross receipts, and then you're going to subtract off any PPP loan amounts that you got, and whatever's left over is what your potential grant fund amount can be. Next slide. So calculation number two, those are for applicants that began operations partially through 2019. And so you have the option, if you started sometime in 2019, of using calculation method number 2 or 3, which we'll cover in a minute. But generally, for someone who began their operations partway through 2019, the way you're going to determine your fund amount is you're going to take your average monthly gross receipts for 2019. So for instance, how you get that, if you were open for 6 months, you would add up those 6 months of gross receipts and divide by 6 to get your monthly gross amount. You'd multiply that by 12 to annualize it. And then you would subtract off your 2020 gross receipts and then subtract off any PPP loan amounts you got. And that money left, that number left over would be your potential fund amount. Next slide. And last but not least, we've got calculation number 3. So it's typically for businesses that began operations on or between January 1st, 2020 and March 10th, 2021. But again, if you started in 2019, you can also use this calculation if you'd like. Just know that if you have to use calculation number 3, your processing time for your application is going to be longer because it's going to take a higher level of review. Okay, so for this particular calculation, you would be looking at, and this is for people that may not have even opened, or maybe they just opened, so they don't have any, gross revenue to speak of before to calculate in. So what you're doing is you're looking at the total amount that you spent on eligible expenses opening your business. So on eligible expenses that between February 15th, 2020 and March 11th, 2021. And then you're going to subtract off any gross receipts that you got in 2020 and 2021 and minus any PPP loan amounts that you got. And that leftover amount would be your potential fund amount. Now, there's one other way to calculate your loan amount. And that's the great thing about calculation 1, 2, or 3 is that they're flexible in terms of you can mix and match them. Because we know a lot of people that own restaurants and other type of food businesses, you tend to be serial entrepreneurs. And so you don't just have one thing all the time. So there may be an instance where you've had an existing restaurant or food cart, for instance, in existence for a while, and that's very easy. You can use calculation method number 1 to come up with your potential fund amount. But then let's say sometime in 2019 or even early 2020, you opened a second location under the same EIN as your existing operation. How would you calculate your fund amount? Well, you would take calculation number 1 for your existing location, the one that's been around for a long time. You take that, you would figure out, use that calculation number 1 to come up with your potential fund amount. And then with your new location, you would look at determining, does calculation 2 or calculation 3 fit my situation the best? Whichever one fits your situation the best, that's the one that you would use. So you would use calculation 2 or 3 for your new location to come up with a potential fund amount for that location. And then you would add them together to come up with a full amount. So that's the kind of the beauty of these calculations, is that you can mix and match them depending on your situation. Next slide. So when we talk about gross receipts, what we're talking about is generally speaking, for your 2019 gross receipts, you're going to see that your gross receipts are going to come off your tax return. So if you're filing a Schedule C 1040, you're going to look at line 3 of that Schedule C and that's going to be your gross receipts. And then if you have more than one of those, you'd add all 3 together of your Schedule Cs that you file on the same 1040. If for partnerships that file 1065s, you're going to look at line 1C. For your S Corps and C Corps that file 1120s and 1120Ss, again, you're looking at line 1C. For LLCs, you would use however method you're taxed by, and same thing with B Corps if that's in your area. So for this slide and what we're trying to say for 2020, we just want to make sure your gross receipts probably do not already include any of the items listed, but we just want to make sure that they don't. So you just want to make sure that that line on your tax return for 2020 does not include any sums of money like a paycheck protection loan, whether it's your first draw or second draw, any SBA Section 111 or 1112 payments, so any payments made on your behalf to your SBA loans. Make sure that doesn't include any economic injury disaster loans or targeted advance grants or other grant funds received via the CARE Act. You want to make sure that any of your state and local business grants are not included in your 2020 gross receipts, and any Randolph Shepherd Act financial relief and restoration payments are not included in your 2020 gross receipts. And again, the reason for that is because it's going back to, we're trying to find your pandemic related losses so we want to take your 2019 operations prior to the pandemic and then subtract off only what you did in 2020, not what you did plus all the government assistance you got, because that would lower your potential grant amount. We wanted to see just what you did. And then subtract off your PPP loan, because like Kathy said, you can't have a PPP and that amount gets subtracted off from your potential fund amount. Next slide. So applications are currently being processed, like Kathy said. So there's three ways to apply essentially. You can apply directly through the SBA website, which is at restaurants.sba.gov, or you can apply through a point of sale vendor. So there's 2 full service vendors right now. So if you use Square or Toast as your point of sale provider, you can apply directly through them, and that's fine too. Or if you don't have access to the internet, you can apply via the telephone through the call center, which is at 1-844-279-8898. But this is really a last resort because telephone applications are going to take quite a bit longer to process. The biggest thing to note on this slide is that if you're going to be applying through Square or Toast, then do not go to the SBA website and create an account and apply there. It's one or the other. So again, if you apply with SBA, you apply with SBA. If you're applying with your point of sale vendor, Square or Toast, you apply with them, but you don't do both because that will cause problems in your application processing. Next slide. So the documents that you're going to need in order to apply, everybody will need an SBA form 3172, which there is a sample one on our website, but it's going to be embedded in the application. So whether you're applying through SBA site or through your point of sale vendor, the application will be embedded. So you don't need to upload it. You can view the sample to see what kind of questions you're going to get asked, but you're going to have to fill out that application, which you'll have to initial and sign, which you'll do digitally on the grant platform when you go through. Everybody will also need to submit an IRS form 4506T, which is a request for tax information. And again, that'll be digitally signed and embedded inside the grant platform. And then everybody will need to demonstrate or give us documentation that demonstrates your gross receipts. And if you're using that calculation number 3, applicable eligible expenses. So we're looking for your business tax returns. So either your 1120 or your 1120S or your IRS form 1040 Schedule C or Schedule F. For partnerships, it's your 1040, your 1065, including your K1s. We're also going to need 3 months of bank statements and potentially internally or externally prepared financial statements, such as income statements or profit and loss statements, or point of sale reports, including your 1099Ks. So we'll go through really quickly the different funding calculations. Next slide, and which of those additional documents might apply to you. So for calculation 1 and 2, you're going to definitely, again, need the application, the 4506T, and for 2019, we will need a copy of your filed tax return. If you were in operation in 2019 and you did not file your taxes, you will not be eligible for the program. You need to have filed taxes if you're required to do so. So you'll need a copy of those tax returns. You'll also need 3 months of bank statements. So the 3 months just prior to the application. So we're looking at February, March, and April, or if you can't get April, January, February, March. And that would be the bank statements for your business account where you want the funds to be deposited. For 2020, you need, again, something that proves your gross receipts. So the preferred item is going to be your federal tax return, a copy of what you filed. If you haven't filed it yet, but you have it prepared, you could give us a copy of that as well. If you don't have your 2020 tax return ready to file, then your point of sale report from your vendor would be the next best thing. If for some reason you don't have either one of those, then you can give us internally or externally prepared financial statements, such as your income statement or profit and loss statement that you sign and date as to the you're certifying this to the accuracy. But know that if you give us that information for your 2020 gross receipts, then it is going to create a longer processing time for your application to be reviewed. Next slide. So for calculation number 3, the ones for people who maybe just opened or are calculating their fund amount based on eligible expenses alone, what you're going to need to give us again is that SBA application, tax verification form, 3 months of bank statements, and then we're going to need something that shows your 2020 and 2021 gross receipts. So for each of those 2 years, again, preferably your 2020 federal tax return that you filed or that's been prepared and not yet filed, and or your 2020 or 2021 point of sale reports. So we're looking for something to see your gross receipts for the year 2020 and the year 2021. For your eligible expenses that you're going to be using to calculate your fund amount, we need documentation that supports those specific eligible expense types. So preferred, the thing that's going to make your application go the fastest is if you can work with your CPA and get a comfort letter from your CPA. That's going to make your application go the fastest. And if you're submitting expenses relating to payroll, we're going to see your we're going to need to see those 941s. If you had outdoor seating expenditures, we're going to need to see those invoices and payments. And if you had business debt that you're claiming, we're going to need to see those loan statements that's supported as well for those eligible expenses that you're using to calculate your fund amount. If you don't have, again, those items, if you can't get a CPA comfort letter, then we will, again, take externally or internally prepared financial statements and your 941s, outdoor seating expenditures, invoices and payments, in your business debt lender loan service statements as needed to support your eligible expenses. Next slide. The only additional thing is if you were a brew pub, tasting room, tap room, brewery, winery, distillery, bakery, or an inn, you need to provide us also with documents that show your eligibility, that show us that you're eligible for the program. So remember, you had to meet that 33% gross receipts for 2019 in order to be eligible for the program. We need to see documentation that supports that. So it could be something like your tax and trade bureau forms or any state or local forms that you filed, or even internally created reports from your inventory management reporting or accounting software. Any of that kind of stuff that shows that at least 33% of your 2019 gross receipts were from on-site sales to the public. Okay, so with that, I'm going to bring Janie on, and she's going to take us through the application process.
Good afternoon. All right, so let's go to next slide, please. How do you get help applying? Because we all know sometimes we need a little bit more assistance. The best source is to call the call center hotline, which is 844-279-8898. It is open Monday through Friday from 8 a.m. to 8 p.m. Eastern time. So you have that as a resource. You can also call us at the Seattle District Office. Our number is 206-553-7310. You will need to leave a message, but please do so. We try to get back to you as timely as possible on the day that you call. There is help available in multiple languages, both on the call center hotline, and there's up to 30 languages that are supported. So we try really hard to make that as a good resource for you. And then the other thing I do want you to know is that there is on our sba.gov/RRF website a knowledge base system, and it's very interactive. And when people call in to the 844 number, the questions and answers are uploaded to the knowledge base system. So you can go in and do inquiries on that, and hopefully you'll get your question answered without having to go to the 844 number. Next slide, please. Best practices always are to provide a complete documentation package. Definitely incomplete applications will be rejected, and the review process will only restart when a complete package is provided. Delays definitely could jeopardize your ability to receiving an award. The other thing is we really recommend utilizing your resources that you have for your accounting information. So CPAs, accountants, bookkeepers, whoever your accounting professional is, they can help you make sure you provide a complete and well-documented application. The one thing I do want you to know is that the SBA is not able to make corrections on behalf of the applicants. Again, if you find that you do need to correct anything that you put into your application, you will need to call the call center hotline at the 844 number. And once you do that and go in to correct your application, you will actually go back to the end of the line. So it's very important, again, that you provide as complete and correct an application as you possibly can at the beginning of the process. We are encouraging you to utilize that sample document to prepare yourself for the online application process. So again, that sample application is available at sba.gov/RRF. Next slide, please. So we have been through a pilot period already. We are in about the middle of that 21-day priority period. This application process began or opened on May 3rd. And again, we have 21 days that is the priority period. And the SBA will be processing only the priority applicants during that 21-day period. However, everyone is eligible to apply, and we suggest that everyone continue to apply regardless of your business ownership status. But during that 21-day priority period, only applications from small businesses that are owned by women or veterans or socially and economically disadvantaged applicants will be funded during the 21-day period. And again, we're anticipating that the review process be on average approximately 14 days. However, we are aware that applicants have already received their award funding from applications that were sent in on May 3rd. So that's a real positive for you. All eligible applications from the remaining applicants will be processed beginning day 22. And again, those applications will be processed and funded until the program funds are fully exhausted. Next slide, please. So let's talk a little bit about the priority groups and what that definition is. Well, a small business concern that is at least 51% owned, managed, and daily operations are controlled by one or more of the following individuals who are owners of the company include women, veterans, and socially and economically disadvantaged individuals. I will be defining the socially and economically disadvantaged individuals in a few seconds here. But the applicants are self-certifying on the application that they meet this eligibility requirement. And the one good thing about this particular program is that all categories, whether you're a woman or a veteran or you're considered socially and economically disadvantaged, if you're an owner, regardless of your percentage, all of those categories will be added together to try and comply with the 51% minimum. So again, the example provided here at the bottom is if you have 5 owners with 20% each, 2 of them are veterans and 1 is a woman, you add all of that up, that's 60% ownership, and that meets the 51% ownership hurdle. Next slide, please. Here are the definitions for socially disadvantaged individuals. And I'm just going to read this because I think it's of value. They are individuals who have been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. Individuals who are members of the following groups are presumed to be socially disadvantaged: Black Americans, Hispanic Americans, Native Americans, including Alaska Natives and Native Hawaiians, Asian Pacific Americans, or subcontinent Asian Americans. There are 2 other groups of socially disadvantaged individuals. They are people who may have disabilities and or they're in a community of LGBTQ members. Economically disadvantaged individuals are those socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same business area who are not socially disadvantaged. So again, the categories above in terms of socially disadvantaged individuals, they are automatically considered to be economically disadvantaged as well. However, disabled and LGBTQ community members are going to have to evidence the economically disadvantaged status, and that is based on 1, your income on a 3-year average is less than $350,000. They have a net worth of less than $750,000, and their total fair market value assets are $6 million or less. Next slide, please. One of the most important things that I can say here is that entity reorganization to purposefully try to qualify for the priority period will result in an automatic disqualification of the ward. So please apply as you are and go through the processing period, and that's the most appropriate thing to do. Next slide, please. So I do want to let you know that there are funding set asides for the smaller businesses. So one set aside is $5 billion for applicants with 2019 gross receipts of not more than $500,000. There is an additional $4 billion set aside for applicants with 2019 gross receipts ranging from $500,001 to $1,500,000. There is an additional $500 million set aside for applicants with 2019 gross receipts of not more than $50,000. Okay, these are set asides based on these revenue ranges. If you have a higher revenue range, you will be in the category for the rest of the funding. So there is no limitation to your gross receipts amount for this program. The SBA does reserve the right to reallocate these funds at the discretion of the administrator. Next slide, please. I think that takes us to the end and we're open for Q&A, but I am going to turn this back over to Desiree for a little bit of updating regarding the program.
Thanks, Janie. So really quick before we go, turn it back over to our friends here at the BBB. SBA did just release a news release just prior to the start of this webinar that let us know kind of where we are in terms of applications and funding. So as of today or to date, there's been a total of $2.7 billion of relief funds that have been distributed to 21,000 restaurants since it opened on May 3rd. There have been more than 266,000 applications received that represent a request for $65 billion in federal funds. And out of all those set-asides that Janie talked about, there's definitely a number of requests that are in there that kind of meet that funding request, except for those businesses that are under $500,000 in 2019 pre-pandemic revenue. There is still funding available, I'm sorry, for those that were under $50,000 in pre-pandemic revenue. There's still definitely funding available in that set aside that has yet to kind of be claimed. So we are keeping the application portal open at this time and encouraging everyone who has not yet applied to get their application in as soon as possible. But especially those that have less than $50,000 in pre-pandemic revenue in 2019. There's still money available in that set aside for that specific group. So we recommend getting that application in quickly, because as soon as that kind of fills up, the indication is that they may be turning off the application portal. So get your application in as soon as you can, but make sure that it's like Jamie said, that it's correct when you're submitting that. So with that, I will turn it back over to our friends at the Better Business Bureau.
Desiree, Kathy, and Janie, thank you very much for sharing your insight. It doesn't look like we have any questions right now. Thankfully, you guys did provide your contact information over at the SBA and some links to additional resources. So if some of those questions do pop up, I'm sure our attendees can reference those for some additional information. I did want to remind everyone that today's webinar has been recorded and can be viewed on our BBB Great Western Pacific YouTube page. We will also be sending that out as a link to that recording once it's available later today. If you're interested in registering for one of our upcoming BBB webinars, including the one we're featuring next Thursday, May 20th, that one's going to focus on the 2021 Edelman Trust Barometer and businesses' role in rebuilding trust, please visit our online events page at trust-bbb.org. I want to thank, again, our speakers today, and I want to thank all of you for joining us. Have a great afternoon, and we look forward to seeing you soon.